Welcome back to Markets Today. We are talking about the growth enterprise market segment at the Nairobi Securities Exchange and how we can use this segment to raise funds for the SME sector in the country. Before we went for the break, Caleb, we were talking about are there structural issues, are there policy issues that we can improve on to make sure that the market is working for SMEs?
I think that's a good question. It's a good notion to put out there. However, I think it still goes back to the investment culture in the country. You know, retail investors don't necessarily pick up a lot of investments in the stock market. You know, you might be burnt once, twice, and then use it more as a trading vehicle and not as an investment long-term, to build long-term growth. Because again, a lot of retail investors or local investors might come up with the notion that maybe the market is a zero-sum game or even a place to lose money. So it's also about education to general investing public. And the like. If we go specifically to GEMS, there was that policy, there have been policies trying to address the lack of enough companies listing. As we highlighted earlier, the goal was to get almost 3 companies per year. So we had the previous Treasury years come out with a policy to try and waive any tax penalties or interest for the 2 years prior to listing. We've had the Capital Markets Authority come up with programs, the incubator programs, to take more companies through like an incubation period before they are able to list. I think they call it Ibuka. So there are a number of companies that were there. I think we had Homeboys coming out of it previously, though again even Homeboys still has its I think that one went to the alternative segment, maybe not the growth segment. So there are some policies that have come about to try and structurally help more companies to list. But again, looking at it from an SME perspective, what is the main driver for these SMEs to actually list on the market? Maybe, as I mentioned earlier,
money.
Maybe just to make yourself more well known, so to improve your profile, and then maybe as an access to capital. So access to capital is mainly through getting other investors or to become your shareholders. So you list and raise money, equity capital from the public. So if this is not, maybe there's a disconnect between maybe the private market valuation and the public market valuation, then if I'm valued higher in private markets, I'd rather stay there. The other thing maybe might be to get money from investors, maybe through debt. It could be I come into the market and then I'll be able to issue maybe a corporate bond or a regulated commercial paper or something like that. But again, you have to look at it through looking at it again in the corporate bond market in Kenya. It really dried up following the Imperial Bank bond, the Chase bond. So it really left investors with a sour taste in their mouths. Though we've had some issuances, we had the Family Bank, I think EABL also came back. But you see, these are really established companies.
Yeah.
So having a local issuance, I mean, maybe not a local, but a SME issue a bond might be a bit skeptical for investors, at least the ones who are still reeling from those aftermaths. So again, if you're able to get this capital, maybe from a bank, but the issue again, as a bank, the funds are,
more costly.
Yeah, more costly, and they come with a lot of collateral or attachments, securitization. So obviously, as a company, I would like to look for a cheaper or alternative way of getting capital, but possibly also going through the long-term view of listing, and maybe if I can get a short-term loan from a bank, they might weigh that and go for the bank loan.
I hear you. I am still holding that faith that one day we'll get to a point where the GEM segment will be the place to go if you want money as an SME. I still believe, but what I hear from you mostly is that the challenge is not necessarily structural and policy issues at the market, but rather an issue of weighing the options. The SMEs find that other options are faster, more convenient, and there's ease of access as opposed to the market. And I think that is a conversation that we need to have, both as a country and as the private sector of it, really to ensure that it is easier to access, it is faster, so that it's not a long-term project, so to speak. Nairobi Business Ventures have been rocking the charts over the few weeks. What's causing the star?
I think for Nairobi Business Ventures, as I highlighted after it came back to the market, it has a foreign shareholder, I think around 80+% shareholding, and they've really shifted the strategy of the company, just from selling shoes and whatnot. So they've restructured. I think they're doing a bit more investments, real estate and the like. So that could be one of the main reasons why there's a lot of activity on that name.
Okay, all right. So the pivoting, the new areas of focus for NBV are attractive to investors.
Yeah, that could be it. Again, having that's a really almost a majority. Definitely a majority anchor shareholder might have given some assurances to the other investment.
A sense of security.
Yeah.
Kuruitu, I need to get that name right, seems to be the stock no investor wants. I was looking at the graph and it's a flat, even for 3 months, a flat, not even one moment of up or down. What's making it repulsive?
Well, I think, again, supply-demand mismatch, again, could also be, again, what I talk about a pricing issue, possibly where maybe natural flows or natural bids are way lower. Again, given its price, I think one share is 1,500. So if you want to buy anything into the stock, you'll need, for standard trade, you'll need at least 15,000. Buying 100 units of the same.
150,000.
Oh, right. Yes, 150,000. you need 150,000. So you see, for a local retail investor, that's a lot. That's a lot. That's a lot.
Yeah, because I know many of us, what you do is you put aside some 20,000, 30,000 every month to hit the market with and build it up slowly.
Yeah.
So first of all, these guys want your 150,000, which is probably your salary. And second, you ask yourself, so who are you exactly to take my 150,000? And what are you bringing on the table?
Exactly.
So I think that conversation makes Kuruitu to be unattractive.
Very, very.
Flem Tree Group and Home Africa have performance but near zero growth. Are they equally bearing the GEM's curse?
I think Flem Tree Group is a bit well known. Its products, they're on supermarket shelves. So I think the profile has has improved. Maybe also since listing. In terms of performance, they did have a rocky patch. I think they were burning through a lot of capital as they were doing a lot of things, not just selling, the spices and whatnot. I think they had a lot of the strategy was, they had a lot of different things that the company was pursuing. So then if you don't focus and achieve one thing after another, you can quickly burn through capital, and that can eventually come to haunt you. For Home Africa, again...
you feel that they were spread too thin?
Yes, they were spread a bit too thin.
Have they changed this strategy?
I've seen they have. Last time that I was looking at the company, they focused a bit back to the initial strategy, of the home spices and whatnot. So they've kind of reduced the multi-pronged strategy of a lot of businesses at once. Home Africa...
Before we go to Home Africa, is this the new approach? And perhaps I need to be educated. You know, the way I was trained is that laser focus always wins. But I see now what Safaricom started off with, because they came as a telecommunications company, then they went into data, then they went into CCTV and street cameras and street lighting, I think, and solar. Then they went into real estate. Then they are into financial services. Is this the new approach? Because I see even Equity Bank is taking the same approach. It's a bank, but it's also a telecommunications company. It's a health services company. And now it's a life insurance company. Is this the new thing for CEOs in Africa?
Well, maybe if I can borrow on some just the thing is, it depends also on your position in the market, because some markets, let's say it's banking, might be growing X% per year, let's say 5-10% per year. You already have a big market share. You don't expect to grow your market share. So that ultimately means, unless you're cost cutting, you're also going to be growing at that X% per year. So for you to diversify, for you to look for new growth opportunities, then that's why you find people or
CEOs opting
trying
to broaden their base.
Obviously, the thing is, you'll have some duds. You'll have some ventures that don't work out. The same, even if I recall, Equity Bank also had an asset manager. Was it? No. What was it? It was a stock brokerage or something.
Yeah, something
like that. So you'll have some misses, you'll have some wins. The same thing if you look at maybe global tech companies, for instance. Because it's almost the same, competition is quite fierce, so they either choose to do a lot of acquisitions or trying to, especially acquisitions in areas where they want new growth areas, because
like frontier markets or something.
Frontier markets, like let's say the cloud, other things like Facebook, you know, it acquired WhatsApp, Instagram, Google acquired YouTube back in the day. See, these things are now so integrated you might not even realize. Yeah. So that could be, again, also sometimes investors, once they see that a CEO has such a grand vision, they are more willing to back them up with capital. But now the question is, are they able to deliver, which also becomes the issue.
So what I'm hearing is the vertical growth is now inhibited or limited.
Once you reach a certain point in your industry.
And so you opt to grow horizontally.
Yeah.
And Flemtree attempted that before they achieved proper vertical growth.
Yeah, I would say so, yes.
All right, let's go to Home Africa.
Home Africa, I think Home Africa being primarily it's in the real estate industry, so it's also always subjected to the ups and downs of the real estate market. So for Home Africa, when real estate is doing quite well, they tend to do better. But given the dynamics of that industry and that sector, especially like if you say last year, 2020, there was a COVID outbreak. So if they had any office space, that becomes a hit. Even if they're selling residential houses and the like, people they wouldn't do big decisions like buying a matrimonial home when there's a pandemic, you see.
Yeah, there are bigger concerns.
Yeah, so you'll rather hold on to that cash and see if you need it or not, and then after. So there's that cyclicality in the real estate sector. So definitely, if they're essentially exposed to that sector, then without any diversification, they'll also be subjected to the same headwinds, fluctuations.
The interest we saw in the market today, could it be just speculative pressure from the retail investors locally?
Given the increase in the share price,
yes.
I will say so. Again, though at least we had, you see, we're still in a recovery mode. So given the huge erosion that the counter has witnessed, if they do announce any numbers that are close to profitability, then there's bound to be some interest pick up in the counter. And again, given that it's more or less, these penny stocks, so it's a bit easier to move. They're a bit more volatile in the market. You see, if a company is trading below a shilling, or even between 1-2 shillings, and you just need 100 to move the price from 2 to 220, that's already 10% up.
Yeah.
So it could just be the local investor trading. So there's that volatility. Price discovery is a bit harder, especially in the penny stocks and these stocks that don't have a lot of institutional interest backing them.
Okay. AA Kenya is raising capital in a private call. I am hoping you have some corporate intelligence. Are they thinking of listing? They are over 100 years old, and I think anybody really would know AA Kenya. And if they went into the market, they have a strong brand. I'm not sure if their books are as strong as the brand is. But I don't know, do you have any corporate intelligence?
I will just say that I have come across their private offer. I think it's a commercial paper program that has been open for quite a while now. So
when you say quite a while, how long are we looking at?
I think I first came across it maybe 2019.
That long? And they haven't gotten money in over 3 years?
No, usually what happens in terms of these commercial paper programs is they're open for a given period of time. So first investors can come in and either they roll over or they can withdraw. So it's an ongoing program, for instance, until maybe they reach their cap. So until they reach their cap, it's ongoing. Yeah.
Okay. You are carrying on about coming across their offer.
Yeah. So I will say that they do have. I didn't come across information that they did have plans to list. Again, you see with private, again, like those private commercial programs, the disclosure requirements are not as much as, let's say, a listing. Though CME has tried to increase the disclosures and get either these programs rated by an independent rating agency or approved by no objection by the Capital Markets Authority. So I wouldn't say that I have any information that they wanted to list.
Okay.
Yeah, because we just debt. It was debt.
It's just the debt. Fair enough. Are there companies in the Republic of Kenya that you're probably drooling over that they should list, especially at the gems market, maybe?
Wow. Okay. Is there a company? Okay, we do have a number of brands, a number of companies that could list. Off the top of my mind, which one? Let's say maybe not possibly in the gems market.
But even in the primary market?
Even in the primary market, we have companies like, Bitco, DevKey, the number of companies out there that possibly could come to list. Though again, looking at it again from their point of view, possibly are the incentives good enough?
Sufficient for them to come to the market.
To come to the market, yeah.
Fair enough. That makes sense. I think there are also questions, rather companies owned by your mother company a Centum investment, or should I say where you guys have invested, that the rest of us are actually drooling over and you are unwilling to bring them to the market. I don't know, companies, last I checked, you guys have invested in Serova, Kenya Wines Agencies, you know, these guys who make pens, I can't remember the name,
Big
Tiger Brands,
Taylor, yeah.
they make pens and hair products and the likes. Yeah, are you guys having any short to mid-term? Long-term, obviously, you'll probably manage me that way, but short to mid-term?
Short to mid-term, none that I've come across. Though the only thing that I can say, I think, because it's already in the market domain, Centum also has its real estate arm,
Yes.
Centum Real Estate, and they are looking for, I'll say, an anchor investor for that side of the business. So to come into Centum Real Estate at the primary shareholding level. So I think, but that is not in terms of listing. Though we also had.
But I thought you guys were also coming to the market. I don't know whether you are listing.
That's with a bond.
Ah, you are coming in with a bond.
Yeah, that's with a bond. Given there's quite some interest from some foreign investors, so we do want a bond, the Centum Real Estate bond. If it can also be cross-listed in foreign markets, possibly Irish stock exchange.
Why is everyone almost all of a sudden interested in the Irish market?
I think they're a bit attractive. They have that international exposure. I think they also don't have. They're a bit more welcoming to, especially the real estate sector. We had Aecon and its REITs also listed there. So I think that's the route to be taken.
I don't know if I'm allowed to ask this or if you are allowed to say it. We will find out after I've asked. What value are you looking at in terms of the primary investor at Centum Real?
For that, I can't remember the exact amount that they were willing to pull in, but it was 1.1 billion shillings from the foreign investor, if I can recall, though it is in the public domain, so it's okay.
Absolutely. Well, I think we have to leave it at that and continue the conversation another day.
All right.
We've been talking about the growth enterprise market segment, GEMS, which is at the Nairobi Securities Exchange, and how it can be leveraged to raise funds or capital for SMEs in the country. Is it attractive enough for SMEs in the first place? Well, it may not be attractive, but it is a possible option for SMEs in Kenya that are willing to build profile and to raise funds. If you're an SME owner, well, you better have a conversation with one of the advisors at the market. We'll call it a day at that point. I will leave you with the currency trading on your screen running for the day. Let's meet again tomorrow at 4 p.m. for Markets Today. I'm your host, Odhiambo Ramogi. Goodbye.